Good afternoon, everybody. I can see people beginning to join into the webinar. Just a couple of minutes and I'll get cracking on. Haven't done one for a couple of weeks, just purely there wasn't much that needed to be said. And obviously you can appreciate last week the furlough claims took up a huge amount of time trying to process all those for clients and giving advice out. So a bit more of an update on furlough claims in the webinar. So just I'll give it another few seconds, just a few more people joining up. Right, it looks like most people have now joined. So welcome to yet another webinar. And just a few housekeeping rules at the beginning. Please don't fire your questions on the first slide, because poor Paul, who is working in the background, is going to answer a lot of the questions through the Q&A. So if you could put your questions there, but hopefully I've answered, well, would have answered a lot of the questions as I go through the presentation. So if you do have questions on a particular topic, if it's CBILS, maybe wait until I've covered that in the webinar and then ask the question. Otherwise, you might be asking questions that I'm going to cover in the webinar. So any problems, let me know with that. So the key topics for today. Quick update on the furlough claims that have been processed, where we are with that. A child benefit scheme, so I'm going to cover that because somebody's been able to claim for the child benefit that had been previously taken off them because of their earnings limit. So that's worth mentioning. Working from home claims, again, something, it's only a small amount, but it could help the employees and directors alike. And CBILS, obviously the new bounce back loan scheme that was only announced, I think yesterday or the day before. And just to let you know what we know about the scheme, which is not a lot, but I can give you some information of where that's going and if that is actually going to go live the day that they announced. Bit of universal credit, business rates grants, cycle to work scheme, again, something that come across. And just lastly, saying about R&D tax credits, where we are with that, and just sort of let you know about our webinar tomorrow that Neil's running on the R&D to go into a little bit more detail. So without further ado, let's crack on with the furlough claims. Big slide here. As you all know, the furlough claims last Monday, the system went live, and believe it or not, give credit where credit is due, it went live. I think even 7 o'clock, an hour before it was meant to. We didn't have any issues crashing. I think only recently, I think today, there's been issues trying to access the portal, but no issues at all accessing it and putting the claims through. No issues with HMRC paying the refunds. I know quite a few clients now have received their refunds today, hopefully tomorrow when the wages are due. Some even received it on last Friday. So I think thumbs up there to HMRC getting it sorted. Just to point some points to note from our experience dealing with these claims. And the main one is there to do with employers' NIC, employers' national insurance, that you cannot claim the rebate because, as you know, you can claim your 80% of the wages, employers' NI, and the pension, the employer's pension contribution, the employer's NI. From April, you shouldn't claim if you're claiming the employment allowance. This is an allowance that every company, I think, is below a certain number of employees can claim against their employer's national insurance bill. Last year it was £3,000. This year it's £4,000. When we process the payroll, and if you process your own payroll, you claim the allowance every month until you utilise the £4,000. So obviously HMRC don't want you to claim the furlough rebate before the employment allowance. So watch that if you're doing your own claims. Payments coming through very quickly, which is good news. Again, next month, believe it or not, I can't believe we're talking about next month, but the May period is going to be quite important. So around the 17th, I think it's 10 days, 10 working days, I think, before the end of the month, you can put your claim through. So again, make sure that you've got the information available. And again, make sure that you're doing it in the employees have been furloughed for 3 week blocks. So minimum claim is for 3 weeks. So I had a query with a client this morning on furlough for 3 weeks, coming back for a week and then furloughed again the second furlough has to be for another 3-week block to enable you to claim the full 80%. So if they come back after a week and they're furloughed only for, I know, 10 days, 2 weeks, then you're not going to get your rebate. So watch that, obviously keep a note of when you're furloughing your employees, and obviously look to see when the right time is to bring them back. You obviously wouldn't want to bring them back 2 days before the 3-week period and forego the furlough claim. So watch that. Again, on HMRC's website, the calculator that's on there, if you're topping up to 100% their wages, unfortunately you get right to the end of the submission and it actually, you can't do the calculation and it throws you out and you've got to go all the way back to the beginning. So watch that out, watch that if you're doing the calculation online. HMRC are now asking for the bank's address when putting through the claims, and I think they're now even asking where the bank statements are actually being sent to. So watch what that's asking for. Re-employing, be careful as well, because we've had a few instances where people have been made redundant or left after the 28th, and only recently they changed the legislation again that even if you've left after the 19th and brought them back and you're claiming for, I know, 10 furlough employees, but the RTI submission only was for 9, it's going to chuck you out. It's going to give you an error message. So watch that when you do the claim. And unfortunately, you're going to have to speak to HMRC to explain to them what you're doing, which obviously at the moment is going to be interesting. And if you can get through on the phone, or even, I think even their chat, they've even put people a stop message on their online chat, which can't deal with the volumes coming through. So, and obviously as people getting paid, just watch out that for the checks later. I'd imagine HMRC, once this all dies down, hopefully we'll get back to some sort of normality. They're going to start doing some random checks to obviously make sure that you can justify the furlough claims, and you've got the evidence that the employees have agreed to be furloughed. So again, make sure you've got your house in order and all your evidence backed up. And if people are furloughing, obviously they should not be working. So make sure they're not doing any work for you. So again, this is just a recap of where people were if they were employed on the 19th and they were on the payroll on or before the 19th. And this whole RTI submission, they did change the date. It was that you had to be at the 28th originally, and then it changed to the 19th of March. But again, they didn't publicize this very well, that you had to do your RTI submission before the 19th. So if you want a monthly RTI submission, then that would not apply because you would have done it at the end of March. So this is just a really good recap of dates to get your furloughs in, and if you're eligible for the rebate. Most people hopefully have put their submissions in now, so hopefully it's not too relevant. Employees you can claim for, this is a bit of a problem as well for one-man band limited company directors, where some payrolls will run on an annual scheme, which you can do. However, if you do the payroll schemes and you're not eligible and not on the RTI before the 19th of March, then because a lot of the RTI submissions will have been done at the end of March, unfortunately, and HMRC have confirmed this, that there will not be a furlough rebate for those annual schemes. Again, it's just something that's fallen through the net, and unfortunately doesn't help those where you're on an annual scheme. Checking claims, we talked about checking claims. If you do need to call HMRC, make sure you've kept your reference numbers and your submission reference, because they will need these reference numbers to make sure that if there's any queries regarding the claims. So that's really everything to do with furlough. Not much else to say. I think it's all now settled down a little bit. Everyone's fears of not getting paid or this portal not working has all been allayed, and we just see what happens next month. Obviously, just keep an eye on those guys going back to work. Obviously, even going back to work on a part-time basis, you can't furlough them. They have to be all or nothing. So watch that out. Watch for that as well for next month. Again, obviously, just to reiterate that the furlough claim is going to the end of June. Originally, it was the end of May. The end of June is the date so far that you can claim for. So this is something that's come up, child benefit scheme. So a bit of a background on who's eligible for the child benefit scheme. So this scheme is applicable to parents, guardians responsible for children under 16 or up to 20 if they're in approved education. The benefit is quite generous. So if you can see there that if you've got 3 kids and the family, you can actually get 2.5 grand's worth of additional tax-free income, which obviously now is quite handy. However, there's a bit of a problem with this. I think it was a good number of years ago, they means tested the child benefit. So basically, if you or your partner earns income in excess of £60,000, you do not get the child benefit at all. If you're between 50 and 60, then you get pro rata amount. But for these purposes, anyone over 60, you don't get the excess. However, obviously what's going on now, people's income have dropped substantially. So if you're now below the £60,000 annual income, so for example, if you were drawing dividends and now your dividends you can't draw, and your salaries you've now dropped down to maybe the furlough amount, and you know your income, your expected income for this tax year is going to be less than 60, you can now go back, and where previously you might have cancelled your child benefit because you had a choice of cancelling it or to pay it back on your tax return. If you had cancelled it, you can now go back and restart your child benefit. So again, this is quite handy that if, for example, you've worked out that, yeah, you think your income is going to be £40,000, you should be obviously phoning up the helpline, getting your claim, and then, I don't know, in 6 months' time, things pick up, and then your income then becomes over £60,000. You will need to repay it back, but don't forget, you only need to repay it back on your tax return for 2021, and that date is actually the 31st of January 2022. So it gives you a nice cash advantage for about 18, 19 months before you actually pay it back. Something very worth considering. Work out what your income is. If you need to speak to us about what your predicted taxable income is, we can help you. And you need to, unfortunately, give them a call and reinstate your child benefit claims, and there's the number there if you need to. So it's something definitely worth looking at, and something that will obviously help. And people do seem to forget that they've cancelled it and now could be entitled to it. Working from home claims, again, this is something that's come up. I think Martin Lewis talked about this on his show, and a few clients have sort of asked if this is correct, and it is. So again, who's legible? If you're working at home due to the virus, a lot of people are doing that. Might be worth waiting till you go back to work to make the whole claim at once, because you can actually get your tax code amended so you pay less tax over the year, as opposed to actually getting a direct refund. Once you submit the claim online, you should hear back from HMRC within a couple of weeks. So what's the process? So there's two ways for an employee. I'll talk about directors shortly, but there's 2 ways for an employee to actually claim this expense. So obviously from the new tax year, they can claim a flat rate of £6 a week. And the way they can do that is that if the employers have the cash, or if the employers are doing okay, the employers can pay the £6 a week tax-free without any issues, no evidence. All they do is top it up and it's tax-free in the employee's hands, so they get it all. If the employer can't afford to do it, then the next best thing is for the employee to claim it from HMRC, and there you can see the tax relief. You're getting a higher rate, 240 or 120 if you're a 20% taxpayer. So you can get this deducted from your taxable income, and again, you don't need to keep any receipts to prove it. So how do you go about claiming it? If you normally do a self-assessment form, you can claim on that, but most people, especially employees, won't. So you go onto HMRC's website, look for the online P87 form, and there you can complete the form, or through your government gateway account, which is really quite handy. Again, they're just the bits of information that will be asked on the form, and they're the sections that you need to fill in about using your home as an office, and obviously if it asks about uniform tax breaks, leave them blank. So again, it's quite a nice way of getting some money. On the online form, there are 2 boxes: amounts paid by you. HMRC have told us that provided you'd had increased costs, just put a total amount that's equivalent to £6 per week for the period you've been working from home, and that's fine. Again, you won't need to show receipts. Amount paid by your employer. If the employer hasn't paid you for working from home, then obviously put 0 in that box. Something definitely worth looking into. If you need any more information on that, let us know. CBILS, an update on the CBILS. Had a very interesting conversation with Paul just before we went live, and one of his clients got approved for £800,000 CBILS loan, which is amazing. I had a client through Lloyd's, got his loan through for about 110 grand in the hospitality sector, got it through really quickly, approval really quick. It does seem to be that it depends on the bank manager and the bank that you're actually speaking to with the loans. Some are taking forever, some are doing it really quick. Some banks not really up for doing the lending. Hearing some horror stories with Metro Bank, just that they're just not really up for doing this type of lending if the balance sheet isn't very strong. As I said, each bank is on its own merits, to be honest. So some applications are being handled in good time. The lender cap has been removed, which is really handy, and that's enabled a lot more loans to go through. They're still looking, and a few slides later shows you exactly what they're still asking for the same information. They haven't relaxed the information. They're still looking at making sure that the company meets the affordability tests. It's still got, the company's still viable. It still has cash flow forecasts. All of that stuff it still needs. The minimum loans are moving down, so you can actually get £1,000 loans. But I think with the new bounce back loans, which I'll talk about shortly, I think those will fall into that bracket rather than through the CBILS. As we know, Funding Circle have been on the accredited list. We was hoping that this week we will know exactly what their lending criteria and their interest rates are for the CBILS, but they are on our capitalised platform. So again, if you're looking, Funding Circle could be a really viable option to getting some funding to help you through the next 6 months or so. 16,600 approvals so far. I think that should up to the end of 23rd of April. I think they were expecting 3-4 times that, so it's hard for the banks to get these through quick enough with their processing and the number of staff that they've got available as well. So it is causing problems, which could be why the new loan that's been talked about has come into play. So these are the sort of things that the lenders are still asking. You still need to put all this information together: 3 years accounts, 12 months bank statements, management accounts, debtors and creditors list, all this normal stuff that you would need to supply if you were going for a normal bank loan. Nothing different there. These are the sort of questions they're now asking as well, so make sure you've got the answers ready. Purpose of what's the purpose of the facility? If it's just to replace existing asset finance, they're not going to want to know. You're not going to get the loan. If it's obviously to do with the shortfall due to the COVID-19, there obviously will be a lot more understanding. And the other questions there that they're asking, and this is what we've seen from banks. So again, make sure that you're ready to answer. And my advice would be, obviously, go to your existing bank, because they're going to be the best bet, because no other bank's taking any other new business on. But obviously come to us and we'll put it through the capitalised platform. So if you've got three applications going at the same time, then you've got more chance of hopefully getting a loan, rather than waiting weeks and weeks and then being turned down and then having to reapply somewhere else. Again, more information. There's a lot of information that they're asking for: annual sales, annual wage bills, number of employees, what have you done to get other government grants or other schemes that you've been applying for, and so forth. So this is announced the other day, the new bounce back loan scheme. Unfortunately, HMRC or the government are very good at just sort of giving little snippets of information out, which obviously causes us an absolute nightmare. So as soon as it's announced the next day or even that evening, people are phoning up and saying, right, when can I get my 50 grand loan? Okay, look, if you read the government announcement, we know as much as you do. So a lot of it is just in the detail. But this is what we know so far. So far we know that this is a new 100% government-backed loan scheme for small business. And it's a new fast-track finance scheme. It was announced Monday. What's today? Today's Wednesday. Crikey, Monday seems such a long time ago. So it was announced a couple of days ago. Businesses will be able to borrow between £2,000 and £50,000. I have heard somewhere saying that it's a hire of 25% of your turnover and 50 grand. So again, we'll see how that pans out and how they're going to do this. That you'll get access to the cash within days. I bet the banks loved that when they saw that. I think they've been struggling with the CBILS, getting that process is set up, and now actually to do this new scheme, I bet they were very grateful of that. Interest free for the first 12 months, unbelievable. And businesses can apply online through a short and simple form, which will be very interesting how that looks. Again, no fees payable for the loan. And again, even better still, no repayments for the first 12 months. And I've heard that the interest rates are going to be a competitive interest rate. It's going to be very, very, very interesting how this scheme works. Again, this morning I read, I think it was in the Telegraph, them saying that there's no way that this is going to go live for Monday. The banks are not geared up for it. Their software is not geared up for it. From a legal point of view, they haven't put the legals in place quick enough for this to be announced. But you never know. Look at the furlough rebate, the portal, that went swimmingly well, no huge issues. You never know. This could be something they've been working on for weeks and weeks, and they know that they'll be ready to go on Monday. The idea is that once we know a lot more of the details, I'll be holding another webinar running through maybe the application process, what they're asking for, and just giving you some guidance on that as well. And also, it's quite interesting. I had quite a few clients we've been discussing about applying for the loan once it goes live, and saying that if they don't need the money, the cash urgently, they might just wait and see what happens, especially in the hospitality sector. Hospitality and maybe the health and beauty sector, where I think they're going to be the last to come out of lockdown, that there could potentially be further grants, rebates, that you wouldn't want to go ahead and get this loan that could jeopardize further grants. So I'm sort of telling people, just maybe watch and wait and see what happens. If you don't need the cash urgently, then just keep an eye on it, because it might jeopardize any further grants that have been coming out. For example, they've already announced that if you've already got a CBILS loan being processed, then you can't apply for this loan as well. So it's one or the other. So again, so those guys who've gone for a 50 grand CBILS loan might be better to wait and apply for this loan, but obviously we weren't aware of that. So sometimes it's just worth maybe holding back for a few days just to see what's happening. So again, these are the guys that are eligible. So most businesses are eligible. UK negatively affected by coronavirus. I can't believe, maybe I've got one client that I know has hasn't been affected too much by the virus from his business point of view. But the interesting point there will be, was not an undertaking in difficulty on 31st December 19. How they're going to define that, I have no idea. There are rumours that they might look at the EU definition based on a percentage of your retained earnings on your balance sheet. I don't know. It'd be quite interesting how they're going to define that. But again, it could be something that is maybe a sworn statement that you sign saying that we're not in difficulty in 31st December. Maybe if you're still in existence now, it shows that you're not in, you weren't in any difficulty on 31st December. I don't know. We will have to just wait and see what the details are. A few businesses there that aren't covered, which is fair enough. As I said, you can transfer your CBILS loan into this bounce back loan if you prefer, and you got until 4th of November 2020 to do that. Again, we will know more once it's gone live. Universal credit, I haven't really touched upon this in previous webinars because it's something that I've left for people to sort of sort themselves out and try and apply it if they think they can get some universal credit. So, but I thought it'd be worth just pointing out, I have quite a few clients that have actually applied for it, have actually got it, have got maybe the advance payment for the universal credit. And I think it's something that is definitely worth pursuing and seeing where you can go with it. It's there for exactly these purposes. It's paid monthly. You're able to get it if you're on a low income or out of work. So if you're being furloughed, you've got no work, or your furlough payments are very low and your total household income has dropped substantially, maybe you've got kids at home, you could apply for this. Usually takes around 5 weeks to get your first payment, but then you get the advanced loan, which is there as well. And you just need to assess yourself every month to make sure that your circumstances don't change. If they do change, then obviously you then need to tell them, tell HMRC to change the amounts that they pay you. Legible, so you're low income or out of work. So again, that could apply to guys who've been furloughed or have actually been made redundant or self-employed and have got no work. So maybe they could apply for this as well. Quite interesting, if you have savings of less than £16,000, then again, you can apply for that if you've got savings less than that, and obviously live in the UK and have children. Am I eligible? If you live with your partner's income and savings take into account, even if they're not eligible for universal credit, so watch that. And if you're a couple and one of you is state pensionable age, again, there's some information there about how you can claim it if you're in state pension age. When you both reach, then your universal credit claim will stop. What will I get? So it's really complicated. I had a quick look on some of the calculations. My God, there's so many variables. The idea is that I think you just work through the calculation online, putting all your details in. Everyone's details are going to be different and financial circumstances are going to be different. So it'd be worth spending a bit of time maybe going through the application, especially if you've got children at home, maybe a disability, and maybe need help paying your rent. This is exactly what universal credit is there to help you with. Let me see if this works. So it depends on your earnings. So there's a link here. So you should be able to see when you go to this link. Obviously, I'll be sending these presentations out afterwards, so you'll be able to follow these links. So there's that, you can get the benefits calculator link there. This is how to claim universal credit step by step. So there's some examples of what you would be entitled to and how many hours working. Talks about if you've been furloughed as well. So there's some good information there on .gov. So definitely worth having a look. Regarding that, so if you're single under 25, you can get a monthly standing allowance, 340 quid to supplement your income. Single and 25 and over, you get that amount, and so forth. And again, all this is on the website. Again, if you've got children, more than one child, all your extra monthly amounts you get. So it could be quite substantial when you tot it all up. And if you need to help with childcare costs as well. So all of this is there to help. If you're disabled or you're caring for someone disabled, you get further amounts. So basically, what to get from this is that it's worth having a look. I think don't dismiss it. I had a client last week who did the application. I think actually the next day, someone from Universal Credit actually phoned him, went through the claim and confirmed the figures were right. And I think literally the next day he had 800 quid in his bank account, where purely did the application on a bit of a whim and a wing and a prayer, but he ended up getting that through as well. So that was very handy. Business rates grants. So we've touched on this before. Again, really worth the recap, because now most businesses should have received their grants. We're hearing people getting 25 grand, 10 grand grants coming through their bank. So this is just a reminder, if you are if you think you're eligible to get these grants, then, and you haven't received your money, then definitely need to follow it up with the local authority. So local authorities are in dealing with these grants. Again, just another point to note that all the grants, furlough, rebate, anything you're receiving is all taxable. So it's not a tax-free grant, it's not a tax-free rebate. Everything needs to be shown and declared when you do your accounts for the current year. So obviously put money away for any tax that is due. So just make sure that you're aware of that. So central government providing local authorities responsible for business rate billing. Those are all for local authorities will contact the grants to contact you. Again, this is a quote from a client who sent us an email saying that he thought that the letter that he got from the council was a bit of a spam or just junk mail. Put it away, filed it in the round paper basket, and forgot about it. And then it was only because the Newham Council called him up, and he got the letter out of the bin, found it and applied, and 6 days later, 25 grand put into his office account. Unbelievable. So please think, if you're not sure what your rateable value is, give the council a call. If you can't find your rates bill, give them a call. If you're not sure if you're applicable for the grant, give the council a call. I think it's worth hanging on or speaking to them just to find out if you're eligible for it. Again here, so you've got two sort of schemes going. You've got those that are applicable for the small business rate relief or rural rates relief. You can get up to grants of up to 10 grand, or for a payment for 10 grand, not up to 10 grand, you'll get a 10 grand rebate. And if you're in the hospitality, retail and leisure sector, and your rateable value is between 15 and 51, then you will get a grant of £25,000. If you are over the 50 grand rateable value, then you're going to get, unfortunately, nothing. So definitely worth looking at your rates bill just to see what your rateable value is. It's not the amount that you pay in rates, it's the rateable value, which is the important part. So watch out for that. Definitely worth looking at that if you haven't received your rebates already. Again, this is just a recap, and the important point there is that it's one grant per property. So if you've got a chain of restaurants, a chain of salons, a chain of anything, if you've got more than one property, then you're going to get a grant per property, not per business. So that could be quite substantial. Again, that's just confirming regarding the grant for the hospitality sector. Something not trivial, but something that somebody's asked about the Cycle to Work scheme. A lot of people now, obviously working from home, just trying to get their daily exercise, has talked about, can my company buy a bike for me to use? So here's a recap of how the Cycle scheme work and how it can be beneficial to you. It was introduced back in 1999. It's been going for a while. The idea was that it helps all the employees. So the scheme's got to be available to all your employees. And the idea is that the employer can buy the bike for the employee to use, and there's no benefit in kind for the employee to use that bike. And they can actually purchase the bike at the end of the first year based on sort of 75% of the 25% of the original cost, which is quite generous. So obviously the employer can purchase the bike, reclaim VAT, and obviously claim corporation tax relief on their purchase of the bike using what's called the annual investment allowance. So you do get all the tax reliefs and the VAT back, and you can obviously get some safety equipment, helmets and high-vis jackets as well, and get the corporation tax relief as well. So ownership of the bike is not transferred to the employee during the loan period. The bike remains owned by the company, and the equipment is used mainly for qualifying journeys. Now, this is quite interesting. Broadly, this means at least 50% business use, and also, which is different to cars and other benefits, that for journeys made between home and the workplace, is classed as business travel. So that's really helpful as well. If you were thinking about a bike and you were going to ride to the office or to your place of work, then that's classed as business travel. So quite generous. How HMRC are going to check this, I have no idea. I really don't know how they're going to enforce this or check it, but it's good for somebody to know. And these bikes, some of these bikes are worth a few quid as well. So I've seen bikes being purchased for 3-4 grand. It's not a cheap investment. So it's quite nice to know that if you're making the scheme available to your employees or your directors, then it's quite tax efficient. So a recap, so directors stroke employees, no taxable benefit in kind, and there doesn't need to be a reduction in salary to offset the cost of the bike. Therefore, director's salary summary will remain unaffected, which is good. The director potentially saves on income tax because the bike is being funded with gross fee income and not personal income. So basically it's coming from the company and not from taxed income. Again, the company owns the bike. Any cost of repairs will remain a cost to the company. Again, believe it or not, you can actually claim a mileage allowance, and they allow 20p per mile for business journeys, which is quite generous. So you can even put through a mileage claim for your bike, which is quite exciting. And it's important. I think a lot of people are looking at this as a way of maybe getting some physical health rather than the tax benefit, and cycling is obviously a great way of achieving this, and get those big thighs built up. And maybe if you're into the old lycra, that also might be applicable for tax relief. So I can imagine loads of clients now, once we get back to normal, driving and riding to the office in their beautiful shiny bikes and their very shiny lycra. So the last point is R&D tax credits. I'm not going to go into a huge amount of detail because, as I said, Neil is going to run a more detailed webinar tomorrow. So if you're not bored of our webinars and have nothing better to do, then watch Loose Swimming. I don't know what time, I think Loose Swimming is finished by now, or Neighbours, Home and Away. You can then listen to Neil, and he will go into a lot more detail, but very, very basic premise on the R&D. R&D is applicable to any size of business or sector, and it's basically there to help create tax credits and tax incentives for companies who are taking a risk by attempting to resolve scientific or technological uncertainties. Then it may be carrying out qualifying activities. This could include, now this is the big thing, this could include creating new products, processes or services, and it's the processes that we seem to be very successful with businesses. So Neil tomorrow will go through quite a few examples of businesses that have claimed R&D purely by the processes that they've implemented and put into their business rather than actual products or services. If you're trying to improve existing or create new products, services or processes and you're breaking technical ground in doing so, there's a good chance you're undertaking qualifying R&D. If it's not already out there in the marketplace and you've got to do something bespoke to generate a service or generate a product or to do something or a process, you are more likely to have an R&D claim. So I think the important point of that, so that's, do you qualify? Most businesses should qualify after having a good conversation with Neil. But the important thing that I want to talk about on the tax planning point of view and cash flow is that if you are entitled to R&D credits and you decide to maybe shorten your year end, which you can do up to I think a minimum of 6 months is your year end, you can do a 6-month period, you could maybe accelerate your R&D claims and get your R&D claims in a lot quicker than you would normally do. So for example, your year end is June, so you wait until the end of June to do your accounts and submit your claim. That will get done, I know, June, July, August, maybe September time. So you're not going to see your money till September. What you could do is shorten your year end to March. So we've just passed that date. Do your accounts now, submit your R&D claim now for the 9-month period and get your refund within a couple of weeks. They're actually processing the refunds really quickly at the moment. They've obviously been given targets and instructions to pay these refunds out really quickly. The last week, we've had clients receiving 80, 90 grand's worth of R&D refunds into their bank account. So that's what I'm thinking is look at your year end. Can you maybe accelerate your R&D claims a lot quicker? So as I said, oh, it's tomorrow 11 o'clock. So unfortunately, those who do like loose women are going to have to maybe record it and watch it the next day or even after Neil has done his webinar. And he will go and talk about some of the companies that have actually been successful in the claims and had success rates. And he will talk through where that's working. Construction industry seems to be quite prevalent at the moment, seems to be doing quite a few claims with those guys. Printers have been successful. Any business really where you think, and you've got to be sort of obviously doing the work, but he will explain a huge amount more tomorrow morning at 11 o'clock. So sign up if you haven't done so regarding that. So finally, how can we help? So right now, guys, I can't say this enough, but make sure you're doing your cash flow forecasts. You need to keep on top of your numbers, look at your forecast. I'm sure they're going to be changing on a daily or weekly basis, but at least get your template done, your figures down on paper. We can obviously help you with your forecasts, even if it's just looking at a simple Excel spreadsheet or maybe more complicated forecasts showing the profit and loss and your balance sheet, and just we can help you with that. Obviously, funding applications through Capitalise. If you think you're looking for a CBILS loan, let me know. As I said, hopefully Monday, Tuesday, once we know more details of the bounce back loans, I'll be holding a webinar and maybe going through the loan application process. So look out for those emails. Obviously, we can help you with submit your claims through the job retention scheme and helping you through that. We've got some great tools and resources to help you with your cash flow management, which I think will be really important as we start coming out of the lockdown and businesses try to get back to normal. We can help you with the profit first system, making sure that you've got enough cash to pay your taxes, you've got enough cash to pay yourself, and keep the business running from a cash flow point of view, and obviously do your R&D tax credits. Again, when you're ready, so this is something we're quite conscious that businesses will need when we come out of this. Look at your organisation reviews. It's amazing that now people have been furloughed, working from home, how people are thinking completely differently about the people working in the business, how they should be working and so forth. We can have a look at that. The same with your systems and processes. How reliant are you working on the cloud? How reliant are you working, were your systems strong enough to work remotely? Again, we can help you look at that. Cloud bookkeeping is key if you haven't already, because of Making Tax Digital being implemented last year. If you haven't already moved to the cloud, go into the cloud for your bookkeeping on Xero, which we recommend, and using all the sort of add-on apps to help you run your business much more efficiently. I think now more than ever is vital to do that. I think it's been quite interesting, the financial information that's going to be asked for with the bounce back loans. Again, those on cloud bookkeeping have got that information at their fingertips, so it makes that whole process so much quicker. Again, we can go through all the benefits of using cloud bookkeeping systems. Ashley in the office is giving a few clients marketing strategies and support. She's helping put together their marketing plan. Again, contact me and I can put you in touch with Ashley. She can help you if it's a digital marketing strategy or just a general marketing review. She's more than welcome to look at that for you. And obviously we can do one-page business plans, look at your strategy the next year, 5 years, look at your marketing strategy and basically your goals and objectives, all of that in one page, in a one-page business plan. Again, we can help you with that. So a lot of good stuff there if you need it. So once we've all finished this, then we can help you do your goals and address those issues, and obviously help you with the profitability and the cash flow of your business. So that's us. I think I've flown through that. That wasn't too bad, 45 minutes. Hopefully Paul has been flying through the Q&A. I have no unanswered questions, which is cool. I think I've got somebody in the chat. Let me see what the chat. Oh, thank you, Ashley. You're so nice. Many thanks, and for the precious Paul and team for the Xero recommendation. Yeah, I've found that once people start using Xero, it does transform the way they interpret their financial information in their business and makes a massive difference going forward. So I think yeah, I can't see, there's no unanswered Q&As there. So that leads me to the end of the presentation. You must look out for the emails that are flying out. Ashley will be sending out a recording of this webinar, and also keep an eye out for details on the bounce back loans. As soon as we hear of any changes, we'll be sending emails out and obviously arranging this webinar going forward. So thank you all for listening, and have a good day, and hopefully speak to you all soon. Thank you.